Hey everyone. So you're probably already aware that Nvidia just completed one of the most remarkable years of business that I've ever seen, right? For a company of this size to increase sales, profits, and cash flow as much as Nvidia did in its recently completed year, I don't think I've ever seen anything like this. It was truly remarkable. So I wanted to go over Nvidia's latest year, the factors that led to this outperformance, and highlight one area that's just getting started. It's already performing remarkably, and it's got this area segment in its business that's just poised to explode. So let's jump into this video. Let's take a look at one of the most interesting companies in the market today in Nvidia stock. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so in its recently completed year, which ended on January 28th, 2024, Nvidia's revenue exploded to $60.922 billion, up from $26.974 billion. In other words, a 126% increase. Its revenue increased by $34 billion. $34 billion increase in 1 year. Phenomenal. All that while its operating expenses only increased by 2%. Now, that's better than it looks on the surface, and in a little bit I'll explain why that's the case. Operating income, look at this jump. 681% increase from 4.2 billion up to 32.97 billion. That's phenomenal. Net income from 4.368 billion up to 29.7 billion. So profitability, operating income up 681%, net income up 581%, while revenue soared 126%. Truly great performance metrics here for Nvidia, and you can understand why Nvidia stock absolutely exploded in the trailing 12 months. Now, I've seen many companies grow revenue by 100% in a year. Fewer still, I've seen grow revenue by 126% when they're already generating more than 10 billion in revenue. When you see revenue growth of over 100%, it's usually companies that are smaller with revenues in the millions, not revenue in the billions. Furthermore, I've seen companies grow revenue by 100%, but fewer still grow profit by 600% while growing revenue at 100%. Most of the time I see companies growing revenue by 100%. These are money-losing companies that are losing money on the bottom line. They're sacrificing profitability, going after growth. And that's very common. I've seen that multiple times. And that's not sustainable and that's not impressive, to be honest. It's easy to grow sales if you're willing to take massive losses on the bottom line. It takes no genius in business to do that. But to grow revenue by 100% and grow profit by nearly 700%, that takes real skill. And that's what's truly impressive about Nvidia's performance in the last year. It was in the right place at the right time. It developed its artificial intelligence products at a time when the market demand for artificial intelligence absolutely soared. And it was partly fueling that increase, right? Without the powerful GPUs provided by Nvidia, would OpenAI be able to train and launch ChatGPT? Maybe, maybe not. So its data center segment is where it reports its AI demand, and that was up 217%. And that strong demand was driven by enterprise software and consumer internet applications and multiple industry verticals, including automotive, financial services, and healthcare. Customers across industry verticals access NVIDIA's AI infrastructure both through the cloud and on premises. What that means is companies purchase NVIDIA's AI infrastructure to install on their own premise at their own locations. And they also access NVIDIA's AI infrastructure through cloud service providers like AWS, Amazon Web Services, Microsoft Azure, and Google Cloud, etc., etc. So it's generating demand from clients, whether on-premise or through the infrastructure. But one area where Nvidia is just getting started is the automotive segment. Automotive revenue for fiscal 2024 was up 21%, and that increase primarily reflected growth in self-driving platforms. That's just getting started. Self-driving platforms are in its infancy right now. They're growing quickly. They're adding to that base. Cars are becoming smarter in that they can park themselves. They provide some lane assist technology. They provide advanced cruise control and so on. But there's not yet this fully self-driving automobile technology broad-based just yet. That's in the early stages of development. And when this market accelerates, that could be a huge driver for Nvidia's products. It's not going to be this year, probably not next year, but maybe 3 to 5 years from now, maybe 3 to 7 years from now, if driverless car technology really takes off, that could be the next leg driving this level of growth for Nvidia whenever that market hits. So this might be 5 years from now, it might be 7, maybe 10 years from now if growth is truly behind schedule. But that could drive another leg higher for Nvidia in terms of over 100% revenue growth in a year during that year when this technology truly takes off and hits that inflection point. So the power of Nvidia's technology is broad-based. We're seeing the early stages of that with large language models, but it's just the beginning stages. Now, remember I highlighted why the operating expense looks better, and it's because of this factor. In 2023, Nvidia's results included a $1.4 billion acquisition termination charge related to the proposed ARM transaction. Remember in 2023, Nvidia tried to buy ARM, and that acquisition didn't go through. Typically, in these transactions, when one company proposes to acquire another company, there is an acquisition termination fee in the contract, whereas the acquirer will say, okay, we'll agree to acquire you, and if for some reason this transaction doesn't go through, we'll pay you a fee if it doesn't go through, because the company being acquired is going through a lot of inconvenience to open itself to acquisition, meaning it's opening up its books, it's providing the acquirer the financial statements, internal documents that are not available to competitors, and so it's risking significant disruption of its own business by opening itself up to acquisition, and so it wants a little fee, well, I shouldn't say little, $1.4 billion worth, just in case it doesn't go through. And for ARM, that actually happened, right? The transaction didn't go through with Nvidia, and so ARM was paid a fee of $1.4 billion. So when you compare 2023 to 2024, 2023's operating expenses were inflated by 1.4 billion. And so if you excluded that, then it would have shown operating expenses increasing by roughly 10% or more year over year. Still impressive, but not as impressive as it looks here, with being just up 2%. So significant improvements here. So Nvidia's data center launched AI inference platforms that combine full stack inference with Nvidia Hopper, Grace Hopper, and these fuel generative AI, large language models, and other AI workloads. They also introduced the DGX Cloud and AI Foundations to help businesses create and operate custom large language models and generative AI models. But here's the big thing that I talked about earlier. Nvidia expects its automotive data center processing demand to grow significantly. Automotive data processing demand to grow significantly. So, like I mentioned earlier in the video, the automotive segment could be the next segment to fuel Nvidia's explosive growth, but that's going to be several years in the future. For now, this year and next year, Nvidia is likely to generate significant growth from their data center for large language models, etc. And then a couple of years later, when growth has slowed down from its current catalyst, it could be getting this catalyst from automotive data center processing, and driverless car technology. So Nvidia's prospects are excellent, to be sure. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.